Let's touch base with A. Balasubramaniam, who's the CEO of Birla Sun Life Mutual Fund, joins us with his year-end perspective and a look into 2013. Bala, thanks very much for taking out the time. What's the sense? Do you think that given all the global turmoil and uncertainty, 2013 can start off on a positive note, given that 2012 has been very strong for India?
Yeah, I think the way we are looking at Birla Sun Life AMC, in the sense that what could be the potential outlook for 2013, I think it reasonably tends to be a better year on 2-3 counts. One, of course, the whole of 2012, we had witnessed a high interest rate regime, and there was a lot of hope that interest rates will be cut and the inflation will come down, which will drive actually the economic growth. And whatever the policy reforms which are supposed to actually drive the economic growth back to around about 6.5 to 7%. The whole of this year, it was only a question mark, and we have seen actually the lowest GDP growth in 2012. Whereas in 2013, at the beginning of the year itself, lots of steps are being taken mainly to address the issue of twin deficit, both the fiscal as well as the current account deficit. And a lot of issues are being addressed mainly to ensure that the economic activities come back to normal and get kick-started. A lot of ground is being created to ensure that the platform is made in such a manner that the next year we need to focus back on growth rather than worrying about the policy reforms. We are quite happy at Birla Sun Life AMC that the last few weeks, the way I think things have been turning up, especially on the government taking initiatives in ensuring that the parliament approvals are taken for majority of the policy decisions, which is now setting the ball rolling for the year 2013. Then second, of course, one need to also look at it, the marginal revival, which is of course is in the card, but nothing significant that is being witnessed in the global economy space, also may act as a support actually for emerging market, especially for India. And the third, on the ways of the platform that is being created and the policy reforms, we could also expect reasonably better budgetary provisions, which should take care of largely the need of the economic growth in having the right expenditures, at the same time focusing on the fiscal balance for the year 2013. All I think combined together should drive actually the outlook for 2013. The last, of course, not the least, today's policy once again did not cut the rate, but clearly I think is the rate cut does not happen today. That doesn't mean the rate cut is not going to come ever. The rate cut point, of course, is come for next year, is only making a case much more stronger for a rate cut to come next year, given the fact that the next year we'll also see a moderate inflation and supported by a reasonably good correction on the fiscal side. The efforts are in the right directions that lead to actually the fiscal corrections on the positive side. All put together, we could also probably witness a better moderate interest rate scenario for next year, which should only drive the economic growth coming back to normal.
Yeah, you're right. The rate cut didn't come by today. The large expectation over there is that it will come by in perhaps a January policy, and the central bank has also hinted towards that in the past. What's the call? I mean, how many rate cuts and how does that change the investment climate? And does that make a stronger case to look at investment-related sectors now at the start of the year than perhaps down the line?
Yeah, the way, of course, we are looking at it, the rate cut is, of course, does not happen. At the same time, we could expect the rate cut to begin next year, which will become one of the key ingredient for kickstarting the economic growth back to normal. And second is the government initiatives mainly to ensure that investments in the infrastructure is also encouraged, both through the public sectors as well as the private sectors, would probably start paying some kind of way for increasing the expenditure towards this segment. And that should also drive the economic growth for next year, which essentially means that the sectors which falling in that segment, which have already gone through the pain period for the last 1.5 to 2 years, due to various reasons which are also in structural nature, may get addressed actually in the coming year 2013. So which essentially means that we may potentially see the sectors which have underperformed the last 2 years in the infrastructure space could selectively come up on the basis of their own strength in the respective space in which they are operating, and also the policy initiatives supported by the low interest rate regime could probably help them actually in cleaning the balance sheet in such a manner, at least some of the assets what they have created is start paying off for them the year 2013 and 2014.
So Bala, how are you positioning yourself? What is it that you're betting on, the top bets, if not for the next 1 year, then at least for the next 6 months?
Yeah, I think one of the clearly area where we at BSL AMC have been focusing is on stock specific. Though we can take a call on the macros and macro variables that's of course affecting the Indian economy. And the Indian market, given the large space of stock that is in the listed space, clearly we are focusing on stock specific. And having said that, some of the sectors which also will in some sense benefit out of the current regulatory changes, current reforms initiatives, such as retail, airline industries, as well as some of the infrastructure space, we have been selectively bullish, and we of course won in the part of the portfolio as well. And within the capital goods sectors, though the sectors have been going through actually a tough time and challenging environment that they have been operating for the last 1.5 to 2 years, and within the sectors we are able to find the companies which are run by the good management, good balance sheet, less leverage, at the same time so they are ready to take off big time on the growth path. And that's the way I've been choosing in the portfolio selections. And within the other sectors, which is the most proxy to the Indian economy, which is the banking as a sectors, also we feel that probably the time would come for the next year, where so far the focus has been the private sector's space within the banking sectors. We may also see actually in the coming year the public sector companies purely based on the basis of the valuations, the way some of these companies are been managing both in the credit as well as the deposit resource mobilizations. I think some of them who are efficient in all parameters, and also in our view would outperform the market for next year.